But look, we got to get you some IPO news here. Financial giants Morgan Stanley and Goldman Sachs are reportedly set to lead Airbnb's direct listing coming as soon as next year. This is according to Reuters. And for more on this, we're now joined by Joshua Franklin, M&A, IPO, and corporate finance correspondent at Reuters. Look, Josh, what kind of signal does this send if Airbnb is showing that it is ready to go public?
Yeah, no, last month we saw them put a mark down clearly in the sand saying that they're planning to become a publicly listed company in 2020. And as we reported, they're very close to hiring Morgan Stanley and Goldman Sachs as the two joint advisors on its listing. And that clearly kind of gives an indication that they're ramping up their preparations. And obviously when you bring two Wall Street heavyweights in, it shows that you really do mean business.
So what does it mean for the timeline?
Well, we understand that they're looking kind of a mid-2020 timeline. I think the thinking there is it does kind of allow you to get out into the public market kind of before there's any volatility that could be faced from the US presidential election. And crucially as well, it's the big question around Airbnb is whether or not we were going to see another direct listing or if it was going to go the traditional route of an IPO. Right. And we understand that they are leaning more towards a direct listing.
And it's interesting because the other direct listings that we've seen, Slack and Spotify, did have good first day reception among investors, and those openings were smooth down here on the floor of the stock exchange. But since then, their stocks have lagged. And so explain the financial position that Airbnb is in right now and why perhaps this direct listing is the path that it will choose.
Well, I think whenever anyone considers now doing a direct listing or an IPO, the big question you have to ask yourself is, do we need to raise money? Because that's the big trade-off that you make when you do a direct listing is you don't raise any primary capital like you would in a typical IPO. Really, you're just giving an opportunity for the insiders, the current shareholders, to cash out and give liquidity to them. And Airbnb, they've said in the past that they've been EBITDA positive. They've said, their business isn't terribly capital intensive if you compare it to someone like a WeWork, which obviously has struggled to get out of the market. So that's why I think a direct listing makes sense for them. The people in the equity capital markets industry as well thinks that one of the big attractions of doing a direct listing is that you don't have the lockup agreements, which really has been one of the things that's vexed kind of the venture capital communities around IPOs for many years, is the fact that their returns can look good on paper, but it takes them upwards of a year sometimes to cash out their shares. You don't really have any of those restrictions with a direct listing, so that's kind of potentially why some VC investors are maybe pushing some companies to consider this.
Joshua, you report in your story in terms of timing. The company wanted to avoid any volatility ahead of the 2020 election. But at the same time, we've seen a lot of volatility, especially with regard to the IPO market, gosh, just in recent weeks and recent months. Any indication that volatility, and I know you can't see the future, will subside a little bit in the first half of 2020?
I mean, who knows? I think people will hope that once we get a little bit more distance from some of the rockier IPOs that we've seen, whether or not it's Peloton and Smile Direct, big IPOs last month, that priced well in their IPOs, but then traded down in the first day, and that really does create a kind of risk-averse attitude among investors, thinking, I don't necessarily want to buy in the IPO or in first day, for fear that you're going to see a repeat there, and also a sense that maybe some companies are coming to market a little bit overpriced. So once you get a little bit more distance there, people maybe reset at the start of the year. I think that's the hope. But obviously, you can, the best laid plans lay in ruins. You can never make any guarantee about what markets are going to look like.
Well, speaking though to market conditions, I mean, the fact that we are talking about the R word again, right? Recession. Have there been any indications that companies might be holding out to get through what is a rough patch in the market?
I think potentially. I mean, it's been interesting to see, even as we've seen, companies like WeWork maybe raise money at frothy valuations. Private markets, in terms of fundraising, are still pretty strong, and so that still is a pretty healthy alternative if you think we're not ready to do the IPO yet. We'll just raise another private round instead. We reported last month on Palantir's fundraising plans, potentially raising, up to $3 billion in the private markets, which really could extend the runway for them to stay a private company for quite a while and really not leave them at the whims of the public market.
What was it that really changed the way that IPOs were received in the first half of the year versus in the last few months?
I think it's interesting, and just in terms of, I mean, it's been a gradual gestation of these new companies this year. Obviously Lyft didn't exactly create a terribly positive sentiment around the space with the way it traded. Then we saw the same with Uber, and I think it is just emblematic of the type of companies that have gone public this year. Private companies have stayed private for longer, they've grown bigger, and the private markets have been able to tolerate large losses for longer than public markets would, so that when they come to to do their IPO, perhaps they're not quite in the shape that public market investors are accustomed to. And I think that's been the gradual kind of narrative that's played out over this year.
Do you anticipate that Airbnb will have better fortunes via direct listing than Slack and Spotify?
It's hard to say. It's interesting because I think one of the things that in some ways is a key indicator of how well your direct listing is going to go is how active your trading already is in the private market. So I think Spotify, its shares were quite actively sold in private secondary market trading in the lead up to the IPO. So the shareholder base was already quite diversified. Slack, I think it was a little bit more limited. Airbnb, there is a fair amount of active trading going on. We understand that shares in the private market are trading for at a valuation of around $46 billion right now. Still quite limited, which does inflate the price, but it does suggest that there is an active market there which could be supportive for them.
So how does, Joshua, going back to what you said earlier, does the changing way that public investors are responding to these money-losing companies, how does that change the way that you think venture capitalists will be willing to give money and fund these companies? If they say, hey, the exit might not be as good as we thought, we're going to pass on this.
Yeah, no, for sure. I mean, the VC model has always been, failure is the price of success. You put your eggs in as many baskets as you can, and you hope you have, 3 or 4 winners that will more than make up for the losers that you back. I think it is definitely something that they will consider, but at the end of the day, there is so much money that has been raised over the last few years in growth equity, venture capital, that they have to put money to work. And it's so competitive to get into these deals that sometimes a high valuation is the price of entry. It is going to be interesting in the next few months whether or not that does lead to some kind of resets in the private markets. But at least at the moment, it's not something that I have seen, but it's going to be interesting for the rest of this year and early 2020.
Joshua Franklin, M&A, IPO, and corporate finance reporter at Reuters. His exclusive is Morgan Stanley, Goldman Sachs are poised to lead Airbnb's listing.
Thanks, guys.